Miles, thank you so much for speaking with us today. I've got a number of questions here, but as I say, we can go off piste at any stage or whatever. But we're very cognizant that you've recently published a report which examines the UK's financial services sector and the wider ecosystem. And there's attention drawn to the 27.5 billion worth of investment from PE funds into some 1,600 companies. How important is this to the health of the wider ecosystem of supporting professional services, as well as the primary finance sector, to maintain this investment? And how can the UK look to attract further investment from abroad?
Sure. Well, Rupert, thanks very much for the opportunity to talk about this. I think both the report that TheCityUK have done, and obviously there's a report that Guernsey Finance have done recently as well. I think these are important contributions to what's going to be an important year in terms of policy and policy development, not just here in the UK, where obviously we have our general election, where these sorts of issues are going to be high up the agenda, but obviously we've got elections in the US and in other parts of the world. This is going to be a really, I think, interesting time in terms of democracies and other countries that are after developing and growing their economies at a time of real pressure in fiscal terms. So I think the role our industry has becomes really important as an enabler of growth, an enabler of prosperity. And PE, as you say, is a fundamental part of that ecosystem because it has that longer term, typically that longer term kind of perspective. It tends to be very active in driving growth, in driving successful companies. There's a real focus often on taking companies that have potential that hasn't been entirely tapped. So it's a really key part of that ecosystem, and the expertise that we have in the British family of financial centres, I think, is a really important part of making that possible.
And exactly as you say, I mean, a lot of this is really for startups, isn't it? I mean, 21 billion of capital investment into UK startups in 2023, and that's what drives the economy. That's really what pushes it forward. So it is essential what we're doing. I don't know if you saw, but recently Guernsey, we were featured in a report from Proskauer, and it showed that Guernsey is the leading jurisdiction for venture capital, which is coming into the UK economy. Is Guernsey recognised in this regard? Or was really seen as an enabler, as a catalyst?
I think that report was a terrific way of drawing attention to that, and it was a great report, by the way, and I think it's a really useful opportunity to stress the utility of that connectivity between Guernsey and the rest of the UK and the rest of the UK family of centres. And you're absolutely right in raising the importance of VC. If you look at the way that VC over the years has been there at the start, has made possible some of the most exciting companies that we're seeing, across the economy. And the UK's got a really good story to tell on that. I mean, if you look at the top 4 centres, because typically VC, as you know, goes into tech, there's a lot of a sort of tech bias towards that. The top 4 centres for VC investment in tech last year were the Bay Area around San Francisco, then New York, then Greater Boston, then London. And the gap between London and Boston was definitely closing. So it's a really key part. And again, if you think about a lot of the challenges that our societies are going to face around ageing, around the need to deal with health demands, around the need to drive jobs, and also the opportunities that are coming from things like AI, people often don't recognise it's our industry that's making all of this possible.
If we could just touch for a second on foreign direct investment. Obviously, after the Harrington report, it was really highlighted that this is essential for the UK. I know both parties, Conservative and Labour, it's a real key part of their manifesto at the moment, and part of the Frontier Economics report, it really highlighted that Guernsey's FDI into the UK has increased 14% year on year since 2020, and I think that's really worth highlighting. From your point of view, this must be very much a driver and enabler of the economy. How do you see centres such as Guernsey really adding to this and being recognised for their work?
Yeah, and again, I think that report's really helpful, and I think and correct me if I'm wrong on this, Rupert, but I think it sort of equated it to the cost of sort of 3 HS2s.
Yes.
And that kind of contribution to the UK economy is clearly hugely significant and hugely substantial. So again, really important that these sorts of things are made, sort of raised up the agenda. I think the Harrington review is really welcome, but if I can be honest, I think probably overdue.
Yes.
So we've done a terrific job in the UK, and I think sometimes we don't recognise our own success to the degree that we ought to in driving inward investment and foreign investment into the UK. We're one of the most successful centres globally for that kind of thing, but you can't be complacent.
Yes.
And it is practically a sort of tongue-in-cheek comment that pretty much every global CEO these days has Macron's personal mobile phone number in their iPhone. And so everybody is chasing this. Everybody's chasing growth, they're chasing investment, they're chasing job creation. So we can't be complacent in the UK. And I thought one of the great advantages of the Harrington Review was recognising that there's a fundamental issue here in the way that government departments are often siloed. And if you are trying to navigate making an investment into the UK, in France, in the US, there's a concierge service. You go to one single place, that person helps guide you through government. We need to address that in the UK, and I think hopefully Harrington will go some way to addressing that.
Okay, brilliant. Just going to move on to personal pensions, because again, part of the City UK report really focused on that. It's obvious that the UK is a massive contributor on the global stage to pensions, and it's a very successful industry over here. So Guernsey has for many years played a very valuable role in supporting that industry, and it's generated some 30 million of fees and returns for UK-based managers. So as we see an increasing need, certainly for the next generation, to invest in pensions, do you think they're going to have a greater interest in things like investment management? Because obviously being now concerned in what you're investing in is going to be fairly major for their future prosperity, isn't it?
Yeah, and you can see what's happened with 401ks in the US or supers in Australia. It's become a sort of popular topic. People in Australia, will sort of, stand around, by the Barbie, if we can play with all the cliches, and discuss their super and how their super's doing. We don't tend to do that in the UK. That's clearly something that we need to work on. There was a report done by the Pensions Policy Institute a few years ago that looked at how can we get young people talking about pensions a bit more, and so they sort of ran a bunch of focus groups with young people about, is the problem using the term accumulation or decumulation? And actually the problem turned out was using the term pensions. So the minute you started talking to people in their 20s about pensions, they just switched off. Yeah. So there's a financial literacy point here. There's a recognition that people at different stages of their lives will focus on different expectations and demands and requirements from their financial perspective. But the sooner that you can work from a financial literacy perspective, the sooner you can make it something that is real to people and they can engage with, I think the more it makes a difference. And I think the auto-enrolment piece needs to be looked at in a slightly different way. So we keep telling people, they'll pick up in the media that, auto-enrolment is your pension. Actually, auto-enrolment is really an investment. It's a form of investment. And if you think about it as a form of investment and approach it as a form of investment, as they do, as I say, in the US with a 401k or in Australia with a super, maybe that will lead to a bit more engagement. But I think there's a sort of societal challenge here that we need to look at. But what is, I think, really exciting, and you've touched on it as well, in terms of the potential possibilities here, is as that sum of money, as that investment opportunity grows, that is sat as a result of the money that's gone into the auto-enrolment schemes, that creates opportunities to finance the kind of growth that we were talking about earlier. And there's some really interesting policy work going on there. And clearly the kind of expertise that sits somewhere like Guernsey will be a part of that solution.
Yeah. I know one of your favourite quotes is always 2/3 of financial services exists outside of the M25. We always chuckle when we hear that, but obviously from the report it really shows that, and it really emphasises that as well. The distribution of employees throughout the United Kingdom, I think, is fundamental. It's very important as well. Harnessing the talents, not only in London, but we've said here Edinburgh, Cardiff, Belfast, so really looking at all four nations. So financial services can really empower that, can't it? It's a real driver not only of the South East, but of the nation's economy as well.
I think that's absolutely right. And we always make the joke that it's not an official City UK meeting until somebody says 2/3 of the jobs are outside the M25. And it is a sense that if you look at Birmingham, if you look at Manchester, Edinburgh, all the major centres, they have grown and they've become self-sustaining in that growth. And it's not just, that those jobs are back office jobs, because that's sometimes what you hear. These are just sort of low quality jobs. Not the case at all. So the UK is the most successful net exporter of financial services in the world, comfortably ahead of the United States, which is second. And about half the exports of financial services in the UK come from outside the M25 as well. So these are high quality jobs. They're jobs that, the sorts of jobs that, a metro mayor would love to see in their city. And so there's a lot of competition for those to be approached and to be taken into those cities. I think the interesting thing that's developing is the expertise that's developing in some of those cities and the specialisms that are developing in some of those cities. So AI, fintech in certain centres.
Manchester's huge, isn't it?
Huge in those areas.
Yes.
Birmingham on banking, and in Guernsey, it's the specialism that's developed in areas such as captives. It's that's developed in areas such as green finance, etc. I mean, there's a huge growth area there and specialism that Guernsey's developed.
That's right. Certainly, as part of our report, we feature the Next Energy Solar Fund, and it's obviously something that we're very proud of. Not only is it a Guernsey Green Fund, Guernsey Green being a world first in innovation, we've got the Natural Capital Fund, and again, having a regulator that really understands it, that is robust but proportionate, but is an innovator as well, is great for us. But again, just touching on that 57 billion of capital that's in the UK at the moment, I think some people forget as well is the returns it creates for UK investors. We've calculated that that's going to be 7 billion of returns. It's also 3 to 4 billion of social returns as well, going into social infrastructure, going into environmental causes. And that is obviously something that not only the current government but the incumbent government possibly as well is really looking at. Do you think financial services gets its due for actually contributing towards those worthy causes and that kind of infrastructure?
I think it's better than it was. It's better than it was. And look, let's be candid, we sort of blotted our copybook as an industry in the minds of many people in the 2008-2009 crisis. And there was a sense that we hadn't done a sufficient job of communicating to the rest of the country and our fellow citizens. This is the benefit that the industry provides. And I think whilst it's really important to make the case for the billions and billions of tax revenues that are generated by the industry and where they go. So we always make the point that the defence budget in the UK is half the amount of tax that is raised by financial services and professional services. The NHS budget, we're about somewhere between half and 2/3 of the NHS budget in terms of the tax that we raise, and that's really important. But we shouldn't lose sight of what we do for people day in, day out. And as well as the tax that we raise, as well as the economic growth that we generate, as well as the jobs that we can create in cities up and down the country, when somebody buys their home, when they save for retirement, when they send their kids to university, when they insure what's precious to them, it's our industry that makes that possible. And we've got to make sure that we're always telling that story.
So Miles, the report gives focus not only to the finance industry, but the wider supporting industries as well, because obviously when you look at the finance industry, everybody thinks banking, everybody thinks insurance, whatever, but obviously there's actually a lot more to it and a lot more to the overall ecosystem and a lot more that makes the UK so competitive. So the partnership between the UK and the specialised private wealth sectors and that Guernsey has really allowed many industries such as the legal and advisory services. In this increasingly uncertain world, what actions can the UK and partners like Guernsey take to ensure that the British family is at the forefront of this industry for years to come?
So I think this is really the critical question, and whoever wins the election, whenever the election is held, this is what they're going to have to grapple with, not least because, as we've been talking about, our industry is a large part of driving growth across the rest of the economy and the social benefit that comes from that as well. So my sense is there's some interesting stuff that's been going on in terms of, as we talked about, the Harrington Review. I think it's important that there's a clear partnership between industry, government and regulators. And I have to say, and this is something you and I have talked about before, Rupert, and the point that we've made to UK government and the opposition, there are some real lessons that can be learned from the experience of Guernsey. So, one of the things I've always really admired about Guernsey is there's a nimbleness to the way that Guernsey operates, because you've had to be nimble, you've had to identify where the opportunities are and the best way of seizing those. And I think there's a lot there in terms of the fact you can get all the decision makers around a core issue relatively quickly, make a decision and crack on. And you've already talked about, for instance, on green finance and the sort of pioneering perspective that Guernsey took on that. So I think as the UK moves forward, we're going to need to see more of that kind of activity, more of that kind of approach. And I think, honestly, that's the direction the world is heading in anyway.
Yes.
And so the faster the UK can learn from experience that already exists within the British family, the quicker we're going to benefit from it.
And again, part of your one of the new reports is looking at the regulator and looking how each regulator can be more competitive, can actually help to drive growth. And we're no different in Guernsey. Thank you. Obviously, we do appreciate that we do have a good regulator. We have a robust but proportionate regulator. Accessibility is absolutely key as well, is being able to bring new clients over and being able to actually introduce them to the regulator so the regulator can understand the mechanics of their business, which for us then makes us very competitive. It means that we can then bring that business on board quickly, swiftly, hopefully at a lower cost as well. Do you think competitiveness from a regulator, it's got to be fundamental, hasn't it? And you know, this is something that you really kind of tackle in your report. Are there any points that you actually gather from that?
Yeah, I mean, I think this is absolutely critical, and we really welcome the secondary objective the regulators were given here on growth and competitiveness. And I think that's clearly the direction of travel that politicians of both parties are beginning to grapple with in the UK, and I think we're seeing that globally as well. And the report that we did with Freshfields, looking at what we can do in terms of benchmarking with other regulators, was really interesting on this. So we looked at 21 globally significant regulators. The UK was unusual in having a clear objective explicitly stated on growth and competitiveness, but most of them in one form or other had something like that. The measurements were very different, so actually creating a common set of benchmarks is going to be the next challenge. So we're going to go away and we're going to look at that and see what might be possible. But what was really clear was one of the things the UK has done well, and I think credit where it's due, is it's been very transparent about how it's going to go after the creation of KPIs around the success on the secondary objective, and we think that's very welcome. Industry definitely welcomes that. But I think as we move forward, there's going to be more and more pressure and more expectation to benchmark regulators against each other in these key areas. And we've got to face up to reality, particularly in developed economies. We are in an era of low growth. And when we think about the challenges that our societies face, whether that's decarbonisation, whether it's the debt that's built up over time, the demographic change, I'm sure there are other challenges, not beginning with D, you can throw in defence and rearmament and so on. There's another one that does. That's got to be driven by growth. That has got to be driven by growth because there's no other way of doing it. So therefore, I think that then speaks to a partnership approach, as I've said, between industry and regulators and government to see how we can do that. So I think there's a lot to do in this space. I think one of the interesting things that our industry is really going to be able to play a role in here, and it's particularly prevalent on the green finance side, is on blended finance. How can the state work with industry to unlock the kind of capital and the kind of investment that we need to move us towards decarbonisation? And that might be a model for work in other parts of the economy.
And I think, just to wrap up, I think partnership is absolutely key. And that's one of the things that we're really trying to drive forwards with our report, is basically saying we're part of the British family. We have been for so many years. And it's about not us being in competition with the United Kingdom, it's us collaborating with the United Kingdom, and it's having a financial services industry that is complementary to what you do here. I think there's things obviously from a United Kingdom perspective, absolutely world leading. And again, we would hope from a Guernsey perspective, if you look at our captives industry, we've had a captives industry that's been established for over 100 years now, which gives it that kind of longevity, it gives it that stability. 40% of FTSE companies currently have a captive in place. I know there's a consultation from Treasury at the moment, and from a Guernsey point of view, we always welcome competition, we always welcome collaboration. But do you think really that having that degree of stability and longevity, surely must display that we are a financial centre of substance, and that we can collaborate together and we can work together going forward.
I think that's absolutely right. And one of the points we've always made is that this means that we've got a selection of clubs in the British golf bag, if I put it in this way.
Yeah.
There are a variety of different specialisms that exist. And there's a variety, sort of moving away from the golfing analogy, but there's a variety of ways that the different centres in the British family cooperate with each other to the mutual benefit of both and to the overall strength of that British family. And I think the thing that I've always found really exciting about the British family of financial centres is that it is more than the sum of its parts. Yeah. And it's the closest thing I can think of to what exists in the United States. So everybody always focuses on New York, but of course you've got fintech in San Francisco, you've got exchanges in Chicago, you've got growing centres in Florida, you've got wealth management in a number of key centres, and we actually have our own version of that in the UK, and I think it's a massive national asset. As we've talked about, it doesn't always get the due that it deserves. That's, I think, therefore on us to make sure that our fellow citizens understand the benefit that we're bringing. But I think it's in a terrifically strong place at the moment, and I'm really excited, by where we're heading over the longer term. I think I'm a massive optimist. I think about the advantages that British family has, and the relationship between the centres on the mainland of the UK, Guernsey, other parts of the British family, I think will be absolutely central to the long-term success of that.
Fantastic. Miles, thank you so much. It's been an absolute pleasure to be with you today. And we look forward to working more closely with City UK now and going forward.
Thanks very much, Rupert. The relationship with Guernsey is hugely important to us, as you know. Thanks very much.
Thank you.
Thank you.